down 14% in 2022. Is McCormick stock a buy for 2023? I'm going to answer that question looking at several key metrics in this video, so stay tuned and let's get right into it. The first thing I want to look at is McCormick's revenue growth quarterly going back several years. And what I can see from this chart is that revenue growth is steadily above zero, right? There's a few quarters of negative growth, but for the most part, it was a slow growing company, less than 8% on average, although it had a few quarters of explosive growth in, of course, after the pandemic when people were cooking at home a lot more often. Growth exploded and reached even double digits for several quarters, close to 20% over some quarters, and that has slowed, but it's still building on top of that, which is impressive that growth didn't go negative, right? So it's and people that learned how to cook during the pandemic, that were buying its spices and things that they use to cook at home, they're not going to forget how to cook because economies reopened, right? So they may not be cooking as often as they did during the lockdown stages, but they're likely to be cooking a lot more often than before the outbreak, right? And you had millions of people that learned how to cook during the pandemic that previously were not cooking so much at home. So that's going to be a tailwind for McCormick going forward the next 5 to 10 years. And then if people don't cook for that long, then they'll probably forget after 10 years if you haven't cooked that much. The next thing I want to look at is its operating income for the trailing 12 months and the operating margin over the trailing 12 months. And on the top here, I have the operating income. Very nice growth in this metric as well. Steadily positive, no negative periods of operating income, and as high as over 1 billion for several quarters during its boom, but still really high at 943 million over its trailing 12 months. Impressive operating profitability. And if we look at its operating profit margin, 14.78% in its most recent quarter, down from the peak of over 18%. Of course, during the peak, sales boomed and operating profit margin boomed as well. But then following that, you had the soaring inflation that started to pinch its margins. But the company did announce that it's going to start implementing price increases, which should start to help bring profit margins back up again over the next few quarters. Overall, though, its profit margin is still above its or right around the rate it was before it exploded after 2018. So we'll see. Hopefully, investors need to watch this closely to see it at least level out and not continue dropping over the next few quarters. That's going to be a critical thing to keep an eye out for McCormick investors. The next thing I want to look at is its cash flow from operations. Again, going back to 2014, looking at trailing 12 months. And again, you see that same trend peaking at the middle part of the pandemic in 2021 and starting to decline as economies reopened, inflation started to pinch its margins, and consumers started to spend their money on away from home channels, and also some trade down behavior as consumer budgets were pinched and they didn't want to pay the premium prices for McCormick products and they traded down to unbranded or store branded products. And the next thing I wanted to look at is McCormick's dividend per share, annual going back to 2014, because of a lot of investors are looking at McCormick because of its steady dividend going back. It's got a long, decades long history of paying a dividend. So I wanted to look at this because this is maybe why you're looking at the stock, because of its dividend. So from 2014 at less than 80 cents per share, the dividend has grown up to $1.36 per share. So not very fast dividend growth, right? It hasn't, it's well, less than double from where it was in 2014. There's a lot of companies that have grown their dividends a lot faster than McCormick, but you may not be able to get as steady a dividend as McCormick has. Maybe you can get better growth with another company, but you may not be able to get the decades long history of dividend payments that you get with McCormick. All right, finally, let's look at its valuation. I have on the top its price to earnings forward ratio at 27.89. It's not it's not it's not cheap in this metric, especially for a slow growing company like McCormick, and especially with the headwinds that McCormick is facing with reopening economies, pinched consumer budgets. So it's not especially cheap on this metric. And then if you look at its price to free cash flow, it's downright expensive at 48.63. It's about as expensive as it's been going back to 2014, measuring in this metric. So using both metrics, a blended average of both metrics, we can say that the stock is relatively expensive. And with the headwinds going ahead in the near term, I'm going to say the stock is not a buy for 2023. McCormick stock is not a buy for 2023. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.